Andrew, it's not just about this. It's looking good. Your forecasts are perhaps what's driving your share price.
Yes, look, today's a really important day for us. As you've just said, the board has approved, after another strong half, an interim dividend of 6 cents per share. But just as importantly, they approved another Australian $916 million for us to go ahead and build the Carrapateena resource. So it's a very good day for the company. It's a very good day for South Australia. And I see this as another good step in the delivery of the strategy we put in place a couple of years ago.
How big and how much production are you going to get out of Carrapateena?
So our base case for Carrapateena development will see it span 20 years and will be running at about just over 4 million tonnes per year. But our current base case only includes just over 80 million tonnes of the total mineralised footprint. There is still a lot more mineralisation around this Carrapateena project. So I see this as phase one. I see it as a stepping stone to longer and bigger things, and that's where we will turn our attention, but not until we've actually developed this project as a base case that we've released this morning.
Andrew, very impressive set of results clearly coming through from the rally in copper prices. How do you see this going forward? I just want to bring up a quick chart. I know you can't see it, but our viewers can. 2052 on the Bloomberg. You've got many different types of fundamentals showing that you've got building stockpiles, Chinese buyers paying less of a premium, and that sort of divergence between immediate delivery and futures prices. You've got everyone from Barclays to Natixis to Bank of America saying that there's something off about this rally, 40% over the past year. Are you guys positioned for weaker copper prices if this rally does come off?
Look, it's an interesting question. So what we focus on is the long-term fundamentals. We're talking about a project here that in its first phase will span 20 years. So they're the sort of time horizons that we focus on. I think fundamentally copper is a very good commodity to be in. I like the fact that demand is shifting. It's being driven as much now by technology as basic infrastructure. And the barrier to entry on developing new copper mines is very high. It's just hard to find them. So that's the first thing. The second thing is the Carrapateena is going to have an all-in sustaining cost of less than $1 a pound, which puts it in the bottom quartile of the cost curve as compared to every mine in the world. To me, that makes it very resilient. And resilience is really important to be able to survive market fluctuations. So short-term price volatility doesn't concern me. It's much more about long-term fundamentals and operating costs.
And what is your outlook when it comes to the copper price?
Look, we don't have a specific price. We use market consensus as a company policy because I think it is very difficult to predict price. The safest place you can be is the bottom part of the cost curve.
Andrew, where's the demand coming from? How much is now China? What kind of feeling are you getting about the Chinese economy from your exports to that country?
We sell our concentrate all over the world, so not just into China, but into several countries. One of the things that differentiates our concentrates from other concentrate is the copper content in it. So Carrapateena will be in the order of 35 to 40% of the con will be copper, which makes it, I think, the second or third highest copper in con in the world. And that's what smelters demand. That helps them blend out lower quality concentrate. So copper price is one driver, but demand for this type of product is a much more important driver for us.
Yeah, Andrew, you're selling the copper very well there, but what about the feeling you're getting out of the economy in China? I know you sell around the world, so you must get an idea what's happening globally as well as for individual countries too.
We do. Look, our partners and our customers are quite buoyant, and I think they share our view generally that because of the technological age that we're moving into, and the ramp-up of batteries and energy storage, electric cars, green energy production through solar and wind, all of those things over the longer term will drive copper pricing, I think probably more so than basic infrastructure starts. And we're only just on the cusp of that sort of technology era, if you like. And that's why we think longer term as opposed to short term.